So once again, welcome back to the session, everyone. So in the last day's session, we were discussing about the reporting part and mainly the part 2 related question, that's the area of 25 marks. And in this session, we will be first of all going through one of the core topic of our AAA, that's the area of quality control. In addition to which, we will also be going through some other areas as well. Okay. So, well, as we know, quality control is one of the key factors that every auditor must be considering while performing an audit engagement, because it is very important for the auditor to ensure that they meet the quality control requirements of each engagement. So, as an engagement quality control reviewer, in some situations, we might be responsible for reviewing the work which is undertaken by another auditor. And after reviewing the work performed by another auditor, we need to critically appraise the report provided by them. And we need to make sure that the quality of the engagement is adequately met. So normally we will be getting questions like this. Say, for example, we will just take a sample question as retriever, and then we will practice a full-fledged question. During the course of your exam, the examiner will ask you to evaluate the quality management, ethical and other professional matters arising in respect of planning and performing of audit of Retriever Group. So Retriever Group is a client company, and as an auditor, we need to know whether the Retriever Group's audit performed by another auditor is appropriate. So in order to understand that, what we need to do, we need to have a clear picture on what the other auditor have done. So we need to evaluate the quality management, ethical and professional issues. So we need to consider the quality control issues. At the same time, if there is any sort of ethical or professional issue, that should also be considered by the auditor in respect of planning and performing the audit of Retriever Group. So you will be getting a scenario like this. You will be definitely be getting an introductory paragraph, and right after the introductory paragraph, all details in relation to the audit which is undertaken by the other auditor will be provided. And you have to evaluate the audit procedures performed by them. You have to consider whether they have obtained sufficient appropriate evidence, whether there is any other issues relating to the audit performed by the auditor. At the same time, you should also be considering any sort of ethical issues and professional issues arising from their work as well. So in order to consider whether they have undertaken the work properly, you can use this set of benchmarks. So when you get a quality control question, or when the examiner asks you to evaluate the quality of an engagement undertaken by another auditor, first of all, you need to consider whether the auditor who have performed the work have appropriately followed international standards on auditing. So well, we know that every auditor should be performing the audit engagement in accordance with the international standards on auditing. Only if an auditor have performed the audit in accordance with international standards on auditing, it can be mentioned that the audit will be appropriate. So we need to consider whether the IS is as follows. Say, for example, consider that it's a new client. So if it was a new client, it is important to determine sufficient judgment at the planning stage in order to determine the amount of materiality. And we know that for every new client, materiality limit will be chosen at the lower limit. However, once the materiality is selected, we have studied in ISA 320 that the materiality should be reviewed throughout the audit, and whenever necessary, that should be revised by the auditor. But in this scenario, it may be mentioned that the auditor have determined a materiality at the planning stage, and throughout the audit, the materiality amount have remained the same, which is not yet reviewed by the by the auditor. So it is inappropriate, because as per ISA 320, we have clearly studied that materiality should be reviewed throughout the audit, and whenever necessary, it have to be revised. Same as that, consider that we have studied in written representation that we will never be able to use written representation as a sufficient appropriate evidence. Instead, the written representation will be used only as a support to other audit evidences. So consider that in case if you have obtained any other audit evidences already, to use the written representation as a support to other evidences is appropriate. But written representation can never be used as a sufficient appropriate evidence, because it's an evidence which is obtained from the client company. So there is always possibility of having manipulations in that. So we will not be treated as a complete evidence. But it may be mentioned in the scenario that due to the lack of external confirmation and due to the lack of other evidences, auditor have concluded that they have obtained sufficient appropriate evidence by getting written representation from the management. Again, it is inappropriate. So you can mention that. So that is what it's mentioned in the first point. You should always consider whether the international standards on auditing has been followed by the auditor. Then, secondly, you need to consider whether the work is allocated to appropriate level of staff. You need to properly check whether the work is provided to appropriate level of staff itself. Say, for example, there are possibilities where the auditor will allocate some of the important judgmental areas to the junior auditors. If any of the important judgmental areas is provided to the junior auditors, they will not be having sufficient experience in auditing these areas. So the evidence obtained by the junior auditors might not be inappropriate. So that will be the quality control issue there. Then you need to check whether the audit is time pressured. Consider that if the audit engagement is time pressured, the main possibility will be the fact that the auditor will not be able to obtain sufficient appropriate audit evidence in a limited time scale. And if the sufficient appropriate evidence is not obtained, automatically this might result in detection risk, because if the auditor is not able to obtain appropriate evidence, incorrect conclusion will be formed by the auditor. So the evidence obtained by the auditor will not be appropriate, and the conclusion formed by the auditor will also not be appropriate. Then we need to check whether the type of evidence obtained is appropriate. So basically, when it comes to type of evidence, we have studied about the reliability of the evidences before in ISA 500. So well, we know that it's always better to obtain a written evidence rather than an oral evidence. It is always good to have obtaining evidence directly by the auditor rather than it's being provided by the client. It's better to get an external evidence which is outside the entity than getting an internal evidence from the management. It is always better to have an original document rather than the photocopies. And finally, as the efficiency of the internal control system increases, the reliability of the evidence will also increase. So you can consider these points. So after going through the scenario, you need to conclude whether the auditor have obtained a written evidence or an oral evidence in that case. If the written evidence is obtained, it is appropriate. If the oral evidence is obtained, then it's not appropriate. Then you have to consider whether the evidence obtained are directly by the auditor, or these are being obtained indirectly from the client. If it is obtained directly by the auditor, it will be reliable. You have to consider whether the auditor have given more importance to the external evidences or for the internal evidence. If the external evidence is given more priority, then the evidence will be reliable. If the internal evidence is given more priority, it will not be much reliable. Same as that, definitely in case of original and photocopies, it's always good to have original documents itself. And we have to check the efficiency of the internal control system. And if the internal control system's efficiency is high, then the reliability will be high. If the efficiency is low, then the reliability will definitely be low. So this is what you need to consider while determining the type of evidence. Then you need to check whether the audit have been performed in accordance with the audit plan itself. So there are situations where you need to change the plan of the audit engagement, and at the same time, there are situations where you should not make any changes in the plan. Say, for example, consider that we are planning for a client company, and we have determined to follow control approach for the audit, whereby we will rely on the company's internal control system and will perform least amount of substantive procedures. But later on, it's mentioned in the scenario that during the time of initial risk assessment procedure, auditor concluded that the internal control system of the company is weak. If the internal control system of the company is weak, we have studied that in that case, we should not rely on control approach. Instead, we have to perform full substantive approach, whereby we need to give more emphasis on the substantive procedures. And if it is further mentioned that the auditor have continued with their existing plan itself, then in that case, it's inappropriate, because they should have changed plan when the auditor have figured out that the controls are not operating properly. The auditor should have focused more on substantive procedures. But if it is not done by the auditor, it is inappropriate. Same as that, we have to consider whether the auditor have properly followed with the plan itself. There are some situations where it will be mentioned in the scenario that the auditor have decided to follow full substantive approach, considering that client is a high-risk client. However, later on, while the auditor have continued with the engagement, audit partner concluded that they will change the audit approach to control approach, as the auditor is not having sufficient time to perform the engagement. So it is inappropriate to change the plan at that point, because for such a client where the risk is high, they should have performed only full substantive approach. And if not, the audit plan will not be followed and the engagement result will not be appropriate. So this is not allowed. So you have to consider in that manner. Then you should always consider whether the audit is properly supervised and reviewed. Audit should always be having proper supervision, which means a senior auditor should always be reviewing the work undertaken by the junior auditors, and the review should always be senior level review. The work should not be provided for review to the same level of staff. Peers should not review their work each other. Instead, work should always be a senior level review. And whenever the review are carried out, the audit team should make sure that in case if any mistakes are arising during their work, should be corrected at the same time itself. If not, the quality of the engagement will be affected. So this is what you need to consider while evaluating the quality of each of the engagements. So you have to consider whether the international standards on auditing has been followed appropriately. You need to consider whether the work has been allocated to appropriate level of staff. You need to consider whether the audit is time pressured, whether the type of evidence obtained is appropriate, and whether the audit plan has been followed by the auditor, whether the audit is properly supervised and reviewed. So this is what you need to consider while performing the questions in relation to quality control. So say, for example, we will just go through the first two paragraphs. See, it's a question called retriever, which we have already done in our class. We'll take this question as example, then we will move on to a full-fledged question, because the questions from the area of quality control is also very limited actually. So they have asked us to evaluate the quality management and ethical and professional issues arising in this scenario. So first of all, the audit has been quite time pressured. The audit manager told the junior not to perform some of the planned audit procedures on items such as directors' emolument and share capital, as they are considered to be low risk. He also instructed us not to use firm statistical sampling method in selecting trade receivables balance for testing, as it would be quicker to pick the samples based on judgment. Two of the juniors were given the task of auditing trade payables and going concern. Audit manager has asked us to review each other's work, as it would be good training for us, and he did not have time to review everything. So they have given us a scenario. So we have to just go through the scenario and we need to pick whatever that went wrong, and then just give a heading and just explain it in your own words about what went wrong and how it have to be done. So they have given us the same point directly, that the audit is time pressured. So when we get that sentence that the audit is time pressured, we can always mention the same possibility that the auditor will not be able to obtain sufficient appropriate audit evidence in a shorter time scale. And if the auditor have not obtained appropriate evidences, it will result in detection risk, as the auditor will not be able to express an appropriate conclusion for the client company's financial statements. And in addition to which, they have stated that the directors' emoluments and share capital are low risk area. So they have instructed the team members not to perform the planned audit procedures. So they are not complying with the audit plan as well. So well, we know that when it comes to the directors' emoluments, it's one of the most significant accounting area, because directors' emoluments represents a related party transaction, which will be always be material on the basis of its nature, and sufficient disclosures have to be given in relation to the directors' emoluments. And it is mandatory for every auditor to have look at the material matters, but they are not giving any importance to the material area, as they consider it to be low risk. It is inappropriate. At the same time, they have also concluded that the share capital is also low risk area, but again, it's not a low risk area, because it's a newly listed client. So for every newly listed client, they might have provided share issue, and they have to have included an adequate amount of disclosures in relation to the share issue. So if it is not done, there can be chances that there will be inappropriate audit evidences obtained by the auditor in relation to all of this area. Then they have also instructed the audit team members, especially to the juniors, to select the samples based on their own judgment rather than using a statistical sampling method. We have studied properly in the standards relating to sampling that it's always advisable to select the samples using statistical methods, because then only every item in the population will be having equal chance of selection. And that too, the judgmental sampling is undertaken by the audit juniors. So well, we know that they are not having adequate experience and knowledge in order to select the samples on the basis of their judgments. So inappropriate samples are chosen, then it might result in sampling risk, whereby the auditor might be providing an inappropriate audit opinion on the financial statements by using inappropriate sampling techniques. So that is what we need to explain there. Then again, they have mentioned that the task of auditing trade payables and going concern is provided to juniors. So going concern is one of the most important and one of the most significant judgmental area in every financial statements. Because as we know, every company will be preparing the financial statements on the basis of going concern assumption or on the basis of breakup assumption. So if a company states themselves to be in going concern, definitely the company might have already taken significant amount of judgments in relation to that. And it is the responsibility of the auditor to evaluate each of their judgment and conclude whether the company is actually in going concern or not. And if it is performed by the juniors, they will not be having sufficient experience for this, and this would result in inappropriate opinion being formed. Then, as it's mentioned in the next paragraph, they have asked the audit juniors to review each other's work, as the audit manager is not having sufficient time to review everything. Again, it's inappropriate because, as we know, every work should be reviewed by a senior lead. Then only they will be able to trace the mistake in the work performed by the junior staff members. If same level of staff is provided with the task of reviewing each other's work, then they won't be having sufficient knowledge in order to understand about the level of mistakes in the work, and the mistakes will remain uncorrected. It will result in inappropriate opinion being formed for the client company. So it is not appropriate. So you have to mention that all the work have to be reviewed by a senior official. So this is what we need to pick as quality control issues, and you have to explain each of these ethical issues each of these quality control issues in your own words. So just identify the issue, explain what went wrong in that case, and explain how it have to be done. So this is how you need to express the answers in relation to quality management issues. Is that clear, everyone?
Yes, sir.
Okay. So we will start with a question called Makko and Co. Okay, Makko and Co. Out of which we are going to start with the question number A. Using the information contained in the Exhibit 1, comment on the quality control of the audit performed discussing quality management, ethical and professional issues. As we discussed in the last day, ethical issues will be the ethical threats, which include self-interest, self-review, advocacy, familiarity, interpretation threat. In addition to that, we will also be considering management threat. And when it comes to professional issues, it's against the ACCA Code of Ethics and Conduct, which includes integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. So you have to consider both the quality management issues as well as ethical and professional issues. Okay? Yeah. So let's start with this scenario. So everyone, please go through the introductory paragraph and then through the Exhibit 1 and try to pick all the quality control issues and ethical and professional issues. Yeah, please start with this question, everyone. So Makko & Co., it's 1st July 2015, you are the senior manager in M&Co, a firm of chartered certified accountants. In your capacity as engagement quality control reviewer, you have been asked to review the audit files of Stanley Company and Kowloon Company, both of which have a financial year ended 31st March 2015. An audit of both companies are nearing completion. The following exhibit available below provide information relevant to the question. Stanley Company provides a summary of issues identified during the review of the audit working papers, and Kowloon Company points raised for your attention by the audit senior. Stanley Company is a frozen food processor selling its product to the wholesalers and supermarkets. From your review of audit working paper, you have noted that the level of materiality was determined to be 1.5 million at the planning stage, and this materiality threshold has been used throughout the audit. There is no evidence on audit file that this threshold has been reviewed during the course of audit. For your review of audit working papers, you know that the packing machine, which cost of 1.6 million, was acquired by Stanley Company in June 2014 and is recognized in the draft statement of financial position at a carrying value of 1.4 million at 31st March 2015. The packing machine is located at the premises of Aberdeen Company, a distribution company which is used to pack and distribute a significant proportion of Stanley Company's products. The machine has not been physically verified by a member of the audit team. The audit working papers concluded that we have obtained purchase invoice and order in relation to the machine, and therefore we conclude that the asset is properly valued and that it exists. In addition, managing director of Aberdeen Company has confirmed in writing that machine is located at their premise and is in working order. No further work is needed in respect of this item. So tell me, guys, what are the issues here? What all are the issues here? Sorry? Exactly. So they have determined level of materiality of 1.5 million at the planning stage, and thereafter they have not revised the amount of materiality, right? Or they have not even reviewed it. And well, we have studied in ISA 320 that materiality for an audit engagement should be reviewed throughout the audit, and whenever necessary, it should be revised by the auditor. But they have not undertaken any review or revision of the materiality once they have fixed it as the planning stage. Therefore, what would be the reason in that case? There can be chances that the company might have done some of the mistakes in relation to any sort of transaction that they have undertaken during the current year. And there can be chances that if a lower limit of materiality have to be even further revised, and if it is not done by the auditor, there is always possibility that that sort of mistake might be missed by the auditor, which might result in inappropriate opinion being formed on the company's financial statements. Okay. Then what else is the issue here? What else is the issue with regarding the next two paragraph? Any problem over there? So what they have told us with regarding the area of PPE. So they have told us very well that during the current year audit, they have obtained details in relation to a new packaging machine, which the company have acquired during the current year. And it was material before probably before charging the depreciation amount, as the opening balance was 1.6 and the closing balance is 1.4. Probably they might have charged depreciation. So before considering the depreciation, so it was a material asset. So we have to perform sufficient appropriate audit procedures to obtain adequate audit evidences. And the packing machine is located at the premises of Aberdeen Company. However, the company have kept the asset in the company's warehouse, company's production site, but these machines are not yet inspected by the or physically verified by the auditor. The auditor's working paper concludes that they have obtained sufficient appropriate evidence, but they have just obtained only a purchase invoice and they haven't obtained any other information in relation to the client. And then they conclude that the machine is appropriately valued and exists. And the managing director have itself sent a letter to the auditor confirming that the client company's asset is held in their premise and no other work is being done by the auditor. So can you conclude that the auditor have obtained sufficient appropriate audit evidence in relation to the assets which the company have acquired during the current year?
No.
No.
Definitely not, right? Because when it comes to an audit evidence, what all are the evidences or what all are the assertions we need to conclude in relation to the PPE? Well, we need to verify the existence of the asset. Then completeness of the asset have to be verified. Then
Rights and
rights and obligation. We need to verify whether this asset are under the rights of the company. So the company must be owning the asset. If not, they cannot treat it as their own asset. Then we need to consider accuracy, valuation, and allocation. Then, what's the next one?
Recalculation, the depreciation figure, 1.4
Exactly.
correct now.
We need to recalculate, which means we are confirming the assertions now. Okay. So in relation to accuracy, we need to recalculate the figure. Then we need to confirm the classification. And finally, we need to confirm the presentation. So these are the assertions which we need to confirm in relation to a company's PPE. And have they confirmed any of this for the current year engagement?
No.
Definitely not. Nothing have been done from the part of the auditor, because the auditor have just obtained a purchase invoice. And by obtaining the purchase invoice and orders in relation to the accurate PPE, we will only be able to verify the cost of 1.6 million is appropriate or not. However, once the missions are accurate, it is necessary to charge depreciation on the assets, and it is the responsibility of the auditor to recalculate the amount of depreciation to confirm its mathematical accuracy. We need to ensure whether the assets are being appropriately valued at the year end by using the cost model or the revaluation model. So we need to consider that. We need to verify whether the company is holding the rights or the ownership over the assets. We need to confirm whether the assets is physically held in the company's warehouse by inspecting the assets. We need to ensure the assets are properly being included within the property plan and equipment head. We need to confirm whether the assets are being completely recorded, whether adequate amount of disclosures are being provided. However, the auditor have not obtained any of the evidences in relation to this. Therefore, the auditor have not obtained sufficient appropriate audit evidence in relation to the PPE balance. Then, they have told us that they have obtained a confirmation from the third party. Sorry, from the managing director of Audit company. So the managing director of Audit company have confirmed in writing that this particular asset is located at their premise and is in working order. So is it appropriate to obtain such an evidence? Can you confirm it as an external confirmation? Will you be able to consider it as an external confirmation in this case? Definitely not, right? Yeah, because external confirmation means it's a direct written response obtained by an auditor from a third party. So it should be a direct written response obtained by an auditor from a third party. But that's not the case here. Because in this situation, the Aberdeen company's managing director have sent this letter to the auditor, even without the request of the auditor. So it is the responsibility of the auditor to request the third party to provide details that the auditor demands. And then the auditor needs to verify whether the assets is actually located at their premises, or if they need to consider the condition of the assets. All this have to be considered by the auditor. But since this particular letter is generated by the Aberdeen company's managing director itself, there can be chances that Aberdeen company and the client company might have been connection between each other. And if the managing director lacks independence, then automatically the evidence provided by them will not be considered to be appropriate. In addition to which, just by obtaining a single evidence, we will not be able to confirm whether there is any mistakes in the financial statements. Because as we have already learned, we must be using corroborative evidence, which means multiple evidences must be used in order to form an opinion on the financial statements, because evidences should be obtained in order to confirm whether each of the assertions are being properly treated. But nothing have been done by the client companies, nothing have been done by the auditors of Marco & Co. Therefore, we can conclude that they have not obtained sufficient appropriate audit evidence in this regard. Is that clear?
Yes, sir.
Yeah. Then the inventory is recognized at 2 million in the draft statements of financial position. You have reviewed the results of the audit procedures performed at the inventory count, where the test count performed by the team indicated that count of some items performed by the company staff was not correct. Working papers state that inventory count was not well organized and conclude that, however, the discrepancies were immaterial, So no further action is required. So what's the issue there? Is there any problem in that case?
Material.
Are they material or immaterial?
Material.
Okay, how can you confirm that it's material?
It
2
is
million.
above materiality threshold.
It's higher than materiality threshold. Okay. Yeah. In addition to which, what's the actual issue there? The company have got an inventory balance of 2 million, out of which they have performed audit procedures only on a sample of inventory. And after performing audit procedures on a sample of inventory, they have concluded that there are some material mistakes in it, which means there are some set of discrepancies. But they are stating that the mistake which they have figured out is immaterial. So consider that company have got inventory of 2 million, out of which they have selected 100,000 ka inventory, and out of 100,000, 20,000 is misstated. Okay. Or consider that 10,000 is misstated. So in this situation, this 10,000 might be an immaterial amount because out of 2 million, only 10,000 is misstated. You cannot treat in that way because if a company has an inventory of 2 million and out of which you have selected 100,000 as sample of inventory, and while testing the sample of 100,000, if you have figured out 10,000 is misstatement, then you have to extrapolate it, which means out of 100,000, 10,000 is misstated. Therefore, the amount of misstatement is how much? 10%. So if we extrapolate it to the total value, then it's like 10,000 divided by 100,000 into 2 million, which means 200,000 will be misstated. So that have to be considered as a material mistake, right? So it's just an example, okay? So in this regard, we need to consider the extrapolation of the misstatement rather than considering how much amount is misstated out of the sample selected. And once the amount of misstatement is extrapolated, and if it provides a significant misstatement in the financial statements, then definitely the auditor should be carrying out further audit procedures, and he should make sure that the level of difference is adjusted in the financial statements. And if the level of misstatement is not adjusted in the financial statements accordingly, then the auditor might need to express an opinion on the client company's financial statements that the client company have not appropriately prepared the financial statements in accordance with the standards, and the inventory balance held by the company is inappropriate. Therefore, the auditor might need to express a modified opinion. However, nothing have been done from the perspective of the auditor. He have just noted that no further action is required and it is inappropriate to perform that. Is that clear, everyone?
Yes, sir.
Yeah. The audit senior spoke to you yesterday, voicing some concerns about the performance of the audit. The summary of his comments is shown below. The audit manager and the audit engagement partner came to review the audit working papers on the same day towards the completion of the audit fieldwork. The audit partner asked me if there had been any issues on the sessions of the audit which I had worked on. And when I said there had been no problems, he signed off the working papers after a quick look through them. When reading the company's board minutes, I found several references to the audit engagement partner, Joe Lanto. It appears that Joe recommended that the company uses the service of his brother, Mick Lanto, for the advice on business development. As Mick is management consultant, based on that recommendation, Mick has provided a consultancy service to Stanley Company since December 2014. I mentioned this to Joe, and he told me not to record it in the audit working papers or to discuss it with anyone. So what will be the issues here? What all will be the issues here? Okay, ethical and professional issues. What all are the ethical issues?
Self-interest, self-review.
Self-review.
Intimidation.
ഏതാ പറഞ്ഞു?
Intimidation.
Self-interest, self-review, intimidation. Which thread it will be?
Familiarity.
Self-interest.
Okay. anyway, it won't give rise to self-review threat, right? Because self-review threat will arise only if the auditor have himself provided services to the client company, which is relating to the client company's financial reporting. Then only it will give rise to self-review threat. But that particular work is not undertaken by any members of the audit team. Instead, that work is undertaken by the partner's brother. So it will not give rise to self-review threat. Instead, as you mentioned, it will give rise to
Intimidation.
probably intimidation threat and self-interest threat. And what is the cause of giving self-interest threat here? What will be the reason of having self-interest threat here in this case?
Referral fee.
It's not because of the referral fees.
Service by brother.
Yeah, because of the service is being offered by his brother. So you can explain that the engagement partner's brother is working for the client company for advice on their business development, as Mick is a management consultant. So there can be chances that this might be having direct or indirect impact over the company's financial reporting. And if something has gone wrong with the financial reporting part, then the audit engagement partner will not be able to disclose this in the auditor's report, as this would create issues in relation to the relationship between the auditor and his brother. So auditor might intentionally try to hide the mistakes in relation to the work undertaken by his brother Mick. So it will result in self-interest threat to objectivity. Is that clear, everyone? Yeah. What will be the other issue? Is there any other issue in relation to the same thing? You can also mention about intimidation threat as well, because Mick will be able to influence Joe while providing the audit service to the client company. So if they unduly influence the auditor in providing audit services, then there can be chances that it will result in intimidation threat. As the Joe is Mick company's brother, he will be easily be influenced by Mick. So you can mention the possibility of having intimidation threat there. Then what will be the other issue? Any other professional issues here?
No supervision.
Sorry?
Supervision. Review.
No. I am asking about the
Lack of integrity.
professional issues.
Integrity.
Yeah. It shows that they lack integrity in this situation, right? Because the audit junior have reported the issue to the audit manager, and what he have, to the Joe, right? To the partner, and what he have replied to this. He have told the junior not to report to anyone else, or it is not necessary to report it in the working paper. It means that that particular person is acting against integrity, as he is not straightforward, or he is not acting honestly while delivering an audit service. So it is inappropriate to do that, and you can mention it as an issue. Clear?
Sir, lack of professional behavior എന്ന് പറയാം.
Sorry?
അവിടെ lack of professional behavior എന്ന് പറയാൻ പറ്റുമോ?
Lack of professional behavior directly paranda, because when it comes to professional behavior, it means that the auditor need to comply with the law and regulations of both the country as well as the professional body. In addition to it, they should not do any act which may discredit the body. That's professional behavior. So when somebody acts dishonestly, or when somebody is not acting in a straightforward manner, it will be against the integrity directly. Get up.
Okay, sir.
Okay.
Objectivity പറയാൻ പറ്റി.
Sorry?
Objectivity.
Objectivity നമുക്ക് പറയാം, because നമ്മൾ അത് എഴുതുമ്പോൾ തന്നെ എന്താ എഴുതുക? When it comes to the first paragraph, we have mentioned about the, when we comes to this paragraph, we have mentioned about the self-interest and intimidation threat, right? So both of this threat will be against the objectivity. So whenever you talk about a specific ethical threat, you should always be mentioning that this creates an ethical threat to objectivity. This creates a self-review threat to objectivity. This creates an intimidation threat to objectivity. So you can mention both together. Okay. So every ethical threats will be against the objectivity of the auditor. Is that clear?
Sir, is there
എന്തോ
different heads ആയിട്ട് പറയണ്ട ഇപ്പൊ ethical issues professional issues എന്ന് പറയുന്നത്?
ഇല്ല അതായത് നമ്മൾ പറയുന്ന എത്തിക്കൽ ത്രെട്ട് എന്ന് പറയുന്നത് തന്നെ അത് എഗനിസ്റ്റ് ദ ഒബ്ജക്ടിവിറ്റി എന്നാണ് നമ്മൾ പറയാ. എല്ലാ എത്തിക്കൽ ത്രെട്ടും ഒബ്ജക്ടിവിറ്റിക്ക് എഗനിസ്റ്റ് ആണ്. അതുകൊണ്ടാണ് നമ്മൾ ത്രെട്ട് ആയിട്ട് തന്നെ അതിനെ ട്രീറ്റ് ചെയ്യുന്നത് കേട്ടോ.
Sir, is there a familiarity threat over here?
No, familiarity threat should not be mentioned there. So since it's already given rise to self-interest, you are not required to mention about the familiarity threat here. Okay, so basically we'll be referring to the familiarity threat if the auditor is providing service to the client and if there is any matters which may arise just because of the familiarity between two persons. But that is not the case here. Here the auditor is acting in his personal interest also. So here it will give rise to self-interest directly. Yeah. What else is the issue here in this paragraph? Is the audit properly supervised and reviewed? No, because it's clearly evident from here that the audit manager and the audit engagement partner came to review the audit working papers on the same day, once after completion of the audit field work. And if the audit partner have just asked the audit senior whether there is any mistakes in relation to the work, and when he replied that there is no problem, he just signed off the work after having a quick look through them. Is it the actual way to perform an engagement quality control review? No, definitely, as we have learned earlier, every review should be senior level review. And first of all, the review have to be undertaken by the audit manager. And after making sufficient corrections in the mistakes identified, that work should be again be reviewed by audit engagement partner. And while performing each of the review, every item in the working paper should be reviewed. They should make sure that the audit evidence obtained by the junior is appropriate. The work undertaken by them are appropriate. Any corrections in the work need to be undertaken. If there is something like that, then that have to be reported to the person who was responsible to the work. And corrections should also be properly reviewed. However, nothing of this have been carried out by the audit manager and by the partner. The partner have just asked the senior whether there is any mistakes in relation to the works undertaken, and definitely they won't be able to figure out the work which they have carried out themselves. And it is the responsibility of the partner to review each and every element of the work. However, the partner have just had only a quick look on the work done by the juniors, and they have just signed off even without considering whether there is any further mistakes. So it is inappropriate. So you can mention that the audit is not properly supervised or reviewed by the audit team. Instead, it was just a quick look. Therefore, there might be still mistakes in the client company's audit working papers, which might result in an inappropriate opinion being provided on the company's financial statements. Is that clear, everyone?
Yes, sir.
Yeah. So these all are the key issues in relation to this quality control question. So probably you will be getting quality control questions like this. So whenever you get a quality control questions, always make sure that you are properly sticking on to the criteria which we have just discussed earlier. So these are the criteria. First of all, you have to consider whether the international standards and auditing has been followed appropriately by the client company, by the audit team, whether the appropriate level of staff have been used for the audit engagement, whether the audit is time pressure or not. You have to consider whether the type of evidence obtained is appropriate. While obtaining the type of evidence, you can consider written versus oral evidence, directly obtained evidence versus provided by the client, external evidences versus internal evidence, original documents versus photocopies. At the same time, you can also consider the possibility of having efficiency of the internal control system. If the internal control system of the company is operating properly, work will be reliable. If not, work will not be reliable. And again, while considering the type of evidence, you should be properly be thinking about the type of audit evidences they have obtained. So you have to think on behalf of the assertions. So well, we know that if there is any elements relating to the P&L, that is the income and expense, we will be considering assertions in relation to the class of transactions, which includes occurrence, completeness, then accuracy, cutoff, classification, presentation. And when it comes to the account balance, which includes assets, liabilities, and equity. We need to consider completeness, existence, rights and obligation, classification, presentation, accuracy, valuation, allocation. So you have to consider whether client have obtained audit evidence in order to support each of these assertions. And if the client have already obtained audit evidence in relation to each of these assertions, then it means that they have obtained sufficient appropriate audit evidence, or else we can conclude that they have not obtained any appropriate audit evidence. So this is how we need to perform audit procedures in relation to, this is how we need to write the quality control points in relation to an engagement, which is already being undertaken by another auditor. So you can expect a question from this area. So it's very important. So please do ensure that you are having clear picture about this. Okay. Is that clear, everyone?
Yes, sir.
All right. So now we will just do one thing. We will quickly brush through the other areas just to get an overall insight about what is there in the other areas. So those who have not attended the revision session, it will be a bit beneficial for them. So we have already completed the audit risk related area. We have discussed about the audit risk. We discussed about the business risk and risk of material misstatement, about the risk of material misstatements with analytical procedures. Then we have also discussed about the matters to be concerned, further actions need to be taken by the auditor. Then matters to be concerned, discussion with the management part about the audit evidence, further action. Matters to be concerned before accepting the engagement and before accepting the terms of an engagement. We have also discussed about the critical appraisal part. Then we have just gone through the area of quality control as well. So immediately we will quickly brush through the area of advertisement and audit fees. So basically you might be getting questions from the area of advertisement as well. So when it comes to the area of advertisement, first of all, you need to have good knowledge on the criteria or the rules in relation to the advertisement. So basically, when it comes to advertisements area, we need to have a good knowledge on advertising and publicity part. So as per ACCA's rule book, an ACCA member is allowed to advertise their service, but as per the general provision, your advertisement should not be affecting any ACCA member or ACCA or accounting profession as a whole. And the aim of advertisement should be always to inform others about the services offered, not to impress about the services that you provide. And at the same time, when you provide your practice name and description, every ACCA can call themselves to be an ACCA or a certified accountant or a chartered certified accountant or ACCA or FCCA. But you are not allowed to use the term ACCA along with a company name. And in case if you are an audit firm, then in that case, you can use the term firm of chartered certified accountants, firm of certified accountants or ACCA practice. But at least half of the partners should be ACCA members. And these partners should be having at least 51% of the voting right. Then in case if all the partners of this firm are ACCA members, then in that case alone, you can use the description members of Association of Chartered Certified Accountants in your professional stationery. And at the same time, if it's a mixed firm, then you need to use the name of your professional body instead of providing your recognition. So the partners of this firm are members of either ACCA or a CAW, if it's a mixed firm. Then while using the ACCA's logo, at least one ACCA member should be there in order to use the ACCA's logo in our professional stationery. And ACCA's logo have to be separate from the logo of the firm. And the size, color, and position of the ACCA logo should be clearly identifiable. And the logo can be directly taken from the ACCA's website. And in case while you determine the name of the practice firm, it should be consistent with the dignity of the profession. And the name should not be misleading. The practice name should not be confused with the name of any other firm. And in case if you are a sole practitioner, in that case, you should not use the term and partners. You should use your name alone. And in case if the auditor need to determine an audit fees, the auditor can charge any amount of fees that the auditor finds to be fair and reasonable. However, he should make sure that the fees that he charges for his work should be reasonably be enough to recover the expenses that will be incurred for the audit. And there should be additional factors that need to be considered while determining the fees, that you can consider the fees on the basis of the work undertaken, or you can charge the fees which you have already pre-agreed with the client, or if you have audited an entity from a specific industry, you can charge the amount normally which is applicable for the industry standards. And in case if you're determining the fees on the basis of the work which you have undertaken, you need to consider the seniority of the person who are involved in that work, the time spent by each person, degree of risk and responsibility that the work provides, urgency of work to the client and importance of work to the client. And in case of any other overhead expenses, like if you're using any sort of experts work, or if you're using any kind of transportation or accommodation, all these expenses have to be considered. But the fees should not be a percentage, contingency, or similar basis, or lowballing and referral fees are also not allowed. Alternatively, hourly rate can be charged. Like the auditor can charge the fees according to the hours spent by the auditor for the client company's audit engagement. Then a firm can quote whatever fees which they feels appropriate. However, they should always make sure that the fees should be charged in accordance with the professional standards. So the work should be undertaken in accordance with the professional standards, and appropriate expertise and experience of the team members should also be considered, which means the quality of the engagement should not be diminished. Another way, the auditor can use the reduction in audit fees as a promotion. However, he should make sure that the quality of the engagement is not compromised in any of these cases. And normally you can expect a question from this area, from both of this area, especially from the area of advertising. So there's a question called SANSEO in your revision kit, SANSEO. It's question number 43. And they will be asking us to comment on the suitability of the advertisement, discussing ethical and professional issues raised. So when they provide an advertisement like this, and when they ask us to critically appraise the advertisement, and they will be asking us to pick the issues in relation to the advertisement, at the same time, they will also be asking us to provide ethical and professional issues as well. So you have to consider properly this advertisement with that of the benchmark we have just learned. See, the company have got 12 officers and 30 partners, out of which only 10 members are ACCA members. But in the advertisement, they use R&Co Chartered Certified Accountants. Well, we know that in order to use the term Chartered Certified Accountants, as we just discussed, half of the members should be ACCA members, and they should be having more than 50% of the voting right. But that is not the case here. Out of 30 partners, only 10 partners are ACCA members. So in this case, R&Co is not allowed to use the term Chartered Certified Accountants, but they have used that. So you can mention that it's inappropriate and it should be removed from the advertisement. Then you need to consider whether there is any statements here that may discredit any other professionals. Yes, they have mentioned that. Have you had enough of your accountant charging you too much for the poor quality services? So they mean the others are charging too much. And at the same time, they have mentioned that the others are providing poor quality services. It is inappropriate. Then they have mentioned that this company is offering, this R&Co is offering most comprehensive range of finance and accounting services in the country. You need to consider, is there any elements in the advertisement that may mislead the users? It will definitely mislead the users if it is not correct. They are claiming that they are offering the most comprehensive range of finance and accounting service in the country. But out of 30 partners, only 10 are ACCA members, and we don't know whether other partners are professionals or not. And at the same time, 12 offices they have. And by having 12 offices and 30 partners, out of which 10 are ACCA members, and by having this many partners, they won't be able to offer one of the largest service in the country. So you can mention that. So if it is not appropriate or if it is misleading information, it should be removed from the advertisement. So when you get an advertisement related question, you need to go through word by word and pick whatever be the issues there. And you have to consider the ethical and professional issues as well. Here they have mentioned that they guaranteed to be cheaper than existing service provider. And last day, while discussing the ethics, we have properly discussed that if we guarantee to provide cheaper than existing service provider, it will represent a low balling, whereby the auditor will reduce the audit fee and proportionately reduce the quality of the audit, which will give rise to self-interest rate. Then same as that, they are providing free business advice to all new audit client. So providing free business advice to audit client will result in self-review threat to objectivity. So in this regard, you have to explain each of the ethical issues and professional issues, and you have to give safeguards for that as well. Is that clear, everyone? So this is how you'll be getting advertisement related questions. So there's only one question in the revision kit relating to advertisement. So you have to critically appraise this and you have to pick all the ethical issues, professional issues, and if there anything that went wrong with regarding the benchmark we learned, that should also be considered. Is that clear?
Yes, sir.
And we have also studied points in relation to tendering as well, right? So well, we know that tendering is one of the most important area. The examiner will be asking you to prepare a tender document. They will not be asking you to prepare a tender document. Instead, they will be asking you to explain the specific matters to be included in an audit proposal or a tender document other than those relating to the audit fees. So when they ask for the specific matters to be included in a tender document, these are the specific matters to be included in an audit proposal or a tender document. So the first thing that you have to include within a tender document is the outline of the audit firm. Well, before that, well, we know that when it comes to audit proposal or tender document, it's a document which is submitted by the auditor to the client company before getting the audit work. So we need to mention about how we will be undertaking the audit engagement for that particular client, how much fees we'll be charging, what are the services that will be offered by the auditor. So whenever we prepare an audit proposal, it should be in such a manner that the client will be attracted by seeing the audit proposal and they need to give us their audit work. So for that perspective, we have to include all the good sides of the audit firm and we have to literally window dress our matters in order to attract more client. So that is what actually we need to do in relation to the audit proposal. So within the audit proposal, the first thing we will be including is the outline of the audit firm. You should clearly specify about the history of the firm, the description of the organizational structure, services offered by the firm, and the location in which the firm offers. So all this, you will be able to get it from the first introductory paragraph. They will be providing details in relation to the audit firm. And rather than just mentioning about the introduction of the audit firm, you have to provide why you need to include that. Maybe in the scenario, it may be mentioned that a client company is having operations in more than 10 countries. Then the auditor should mention that the auditor should clearly specify about the countries in which the audit firm is having offices, so that the client is also planning to expand their operations to overseas countries. So if we have offices in those countries, we will be able to provide audit services to the client company. So you can mention there. Then you need to mention to the requirements of the client, especially if it's a first time audit or if the client company is auditing their financial statements for the first time ever. They might not be familiar with the duties and responsibilities of the auditor as well as the management. So we have to mention that. If the client is having offices in multiple countries, or if the client company is having subsidiaries in different countries, in all this situation, the requirements of the client specific to each of the countries have to be defined here. Then proposed audit approach should be provided about how we will be carrying out the audit. Methodology of the audit have to be provided. Communication should be specified. Deadlines have to be specific to the scenario. It may be mentioned in a scenario that the auditor is expecting the audit engagement will be completed within, client company is expecting that the audit engagement will be completed within 2 months. So you have to clearly define here. The auditor should clarify about the time scale that will be taken for the completion of the audit. The client company have requested the audit to be completed in 2 months period, but it's not a reasonable period. So the auditor should clearly define that the auditor will be taking additional time period for the completion of the audit engagement, and the period estimate should also be provided. Key staff and resources. Maybe in the scenario, it may be mentioned that client might be using some set of computerized accounting systems, or it may be mentioned that the client is specific to an industry. In all this situation, we should be having some additional resources. Like if the client company is using some softwares, then in that case, we need to use the computer-assisted auditing techniques in order to audit the work undertaken by the client. So if we are using computer-assisted auditing technique, or if you have put a resource for that, we have to mention it over there. Same as that, in addition to this, we need to consider the possibilities of having additional staff and resources, or the ability of our staff for the performance of the work should also be clearly mentioned. Then when it comes to the fees, we need to mention about the fees normally, but in this case, it is not required, as they have mentioned the client that recommend that the fees is not to be included, or else we have to mention how we will be calculating the audit fees. The acceptance of the audit fees have to be mentioned. Then we have to mention we will not be charging fees on the basis of percentage and contingent basis, fixed amount, and the payment schedule should be specified. and how we will be maintaining quality control and ethics should be clearly specified. And the ability to offer non-audit and assurance service should also be clearly specified. Especially there are cases where the scenario will define that the client company is willing to pay for other services. So if the auditor is not able to get the audit work, then also the auditor will be able to claim the other services from the client company itself. So we need to specifically mention about the ability of the firm to offer other services as well. So these are the things that we can include within an audit proposal, and it's very important. So whenever you give the audit proposal or tender document matters to be included in an audit proposal, make sure that you should not write rote learned knowledge. You will not get any marks for that. You need to mask these points to the scenario. Well, we have practiced multiple questions during our regular session, and the questions are also very limited in this area. So please do go through the questions we have already practiced. Like you can go through the question like Western, then you can also do the questions like Dragon. So all these are specific questions for the audit proposal. So you have to match these points to the scenario, and you have to make sure that you have included sufficient data from the scenario within the tender documents content. And in addition to this, they have also asked us for, assuming that the Western company is appointed to provide audit services to Jones company, discuss the issue to be considered by the firm in determining a fee for the audit, including ethical matters raised. So they have asked us about what we need to consider while determining the audit fees. So what are the factors we need to consider to determine the audit fees? As we learned earlier, we need to consider the cost of providing service before determining the audit fees. In addition to which, seniority of the person involved, time spent by each person, importance of work to the client, urgency of work to the client, and all those points have to be considered. Plus, they have also asked us for ethical matters raised in relation to this. Please read this paragraph. They have mentioned that the client company is looking for an audit fee, which is a competitive audit fee, and that would be quite low. So what will be the risk there? They can be possibly having lowballing, which might result in a self-interest threat to objectivity. Same as that they have mentioned over here. I would like the audit fees to be linked to the Jones company's success in expanding overseas as a result of the audit firm's advice. So what kind of threat it is? It represents a contingent fees because they are willing to pay the fees according to the success in expanding the overseas. So automatically it will result in a self-interest threat to objectivity. So you can mention in this regard about the ethical threat that will be arising as a result of the determination of the audit fees. So you have to mention about the ethical issue. You have to explain it, why it creates an ethical issue. And finally, you have to give a safeguard for the ethical issue as well. Is it clear, everyone?
Yes, sir.
Yeah. So this is how you'll be getting questions on audit proposal as well as on the area of audit fees. So you have to go through both of these questions. And when it comes to the area of audit fees, make sure that you are specific to the scenario. And moreover, when it comes to the area of audit proposal or the tender document, you should always be writing points on the basis of the scenario. You should not give any rote learned knowledge. Again and again, I'm repeating the same thing because you will not be getting any marks for that. Okay. All right. So let's continue with the case. Next, it's about the going concern matters and the matters which affects the key performance indicators. We have already done multiple questions from the area of KPI, but well, we know that when it comes to going concern, the questions are very limited. So we have done a question called Kandinsky. So the Kandinsky second question, which is based on international. So when it comes to the question like this, the examiner might be asking you to identify and explain matters which may cast significant doubt on an entity's ability to continue as going concern. When the examiner asks you to identify and explain matters which may cast significant doubt on entity's ability to continue as going concern, you have to go through the general scenario. You must try to pick all those matters which you feel that might affect the company's ability to continue as going concern. Let it be anything. Let it be anything, whatever be the case. So if there is something which shows that an entity's going concern will be affected, you can just pick that and explain it in your own words. Say, for example, as you can see over here, it is already mentioned in the scenario that this particular company is involved in a business of selling expensive products like the luxury food items, like chocolates and other confectionery items. And the country in which the company operates is in a recession stage. So definitely by just hearing the term recession itself, we will be able to understand the fact that company might struggle. And they have mentioned that they have only a cash balance of 150,000 in their bank account. So by looking at the financials directly, we will be able to find that the company's amount of revenue have been decreased significantly. And the current year, the company have resulted in a significant loss as compared with that of the profit in the prior year. So there are chances that in case if the recession continues to be there in the market, then the company will struggle to be in going concern, as the company will not be able to generate cash flows in a recession period, especially since the client company is operating in a market of luxury products. So you can explain it further to represent uncertainty relating to going concern. Then further, they have mentioned that they have taken a bank loan, and this bank loan is having covenants, as well as they have also provided security in relation to the bank loan. They have given head office and manufacturing site as the security. And the first repayment of loan capital is 350,000, which is due to be paid on 13th June. So currently the company is having only cash balance of 150,000. And the amount of loan capital that need to be first repaid is 350,000. That too within the current year itself. And what will be the cause here? If in case if the company is not able to settle the amount of loan capital due, then the company's head office and manufacturing site will be seized by the bank. So in that case, the company will not be able to continue with their administrative activities or with regarding the production of their inventory in case if they are not having a manufacturing site. So this will affect the company's going concern ability. And again, further, they have mentioned that Kandinsky company have negotiated terms of trade with one of their supplier. They have extended the payment terms from 50 days to 80 days to improve the working capital. So in that situation, what will happen? If the company have extended 30 days, like it's around a month or more than a month, if they have extended the payment terms, therefore, there can be chances that the supplier of the cocoa beans, which is the major supplier, will be dissatisfied by the Companies Act. And in case if the supplier is dissatisfied, they will not be willing to offer further credit in future. In that situation, the company will struggle to meet their requirements of the customers. And the customers will be dissatisfied if the products are not being delivered to them on time. So that will be the issue there. Same as that, it's mentioned over here that the company is having a borrowing facility, which is having an interest cover of 2, and ratio of bank loan to operating profit is 4:1. And they have given a details over here with regarding the company. So you can calculate the interest cover ratio and the other ratio. And you have to consider whether the company will be able to take the undrawn borrowing facility. If not, in case of struggling, the company will not be able to meet even by raising the financial requirements by bank loan. So the company might face issues. So this is how you'll be explaining each of these uncertainty relating to going concern part. And they have also asked you to recommend the audit procedures to be performed in relation to the going concern matters identified. So when they ask us for audit procedures in relation to the going concern matters, you have to write audit procedures specifically to the scenario. So when they ask you for audit procedures in relation to this, you have to obtain the copies of bank documentation to confirm the amount borrowed, interest rates, and the conditions under which the bank will be able to cease the company's operations in order to understand whether the company will be able to continue as going concern. So you have to review the correspondence between the supplier of cocoa beans and the Kandinsky company in order to understand whether the supplier have agreed to the renegotiated payment terms and whether they are satisfied. Then you can have a discussion with the management whether they have any alternative sources of finance available in the absence of the undrawn borrowing facility. Or you can review correspondence between the bank and the Kandinsky company in order to understand whether the bank is willing to extend the borrowing facility, even in the absence of meeting covenants relating to the borrowing facility. So these are the set of procedures you can perform in relation to each of these. So whenever you perform an audit procedure, it should be specific to the matters you identified. Okay. Then the next question is on the area of key performance indicators. When it comes to key performance indicators, first of all, they might be asking us to discuss the relevance and measurability of the performance information provided. So they have given the performance information like percentage of students who completed the graduation program, percentage of students who have achieved the distinction, percentage of students who have obtained graduation level employment, percentage of the students who have rated experience as excellent or very good. So these are the performance measures. So whenever we get performance measures, they will ask us to evaluate the relevance and measurability. So Rockto University is a public sector entity. It's a small university in town. So in that case, you have to first of all think about the stakeholders for this particular organization. So you have to think who all are the stakeholders for a university. There will be parents, there will be students, there will be potential employers, there will be potential new students. Since it's a government undertaking college, there will be definitely government will be one of the main stakeholders since a public sector entity. In addition to his media, general public, everyone will be evaluating their performance. So the first thing you have to consider whether it is relevant. So well, we know that when it comes to stakeholders like parents and students, percentage of students who completed graduation program is very important, because definitely before every student joins a campus, they will be considering whether they will be able to clear their exams by attending their classes. So graduation rate is an important performance measure. Academic performance, definitely when a government spends significant amount of fund for the purpose of providing education to the citizen, they need to know whether this is becoming worthful. So they will be considering employability rate. Definitely the employers will be preferring to select candidates from a particular university where hiring is very high, because they will assume that this university students will be more competitive as more employers are hiring from that specific university. So the employability rate will be considered by multiple stakeholders, especially the parents, students. Before joining college, they need to know whether they will be able to secure a job after completing their course. So they will be considering all of this. Then that's all about the relevance. When they ask us for the measurability, you need to consider whether this performance measure is a quantitative measure or a qualitative measure. When it comes to a quantitative measure, it's something which you can measure in figure. When it comes to qualitative, we know that it's subjective. Percentage of students who complete their degree program, it's a quantitative measure. So it will be measurable. But when it comes to course satisfaction, the percentage of students who rated their experience as excellent or very good, it's a qualitative measure, subjective measure. So it's not measurable. So in this regard, you can discuss the relevance and measurability of the reported performance information. In addition to that, they might also be asking you to recommend the examination procedures to be used for KPI. When they ask for the examination procedures, you need to properly consider about the procedures that can be performed by an auditor in this regard. You can consider the possibility of discussing with the management, obtaining representation, confirmation, reviewing correspondence, obtaining other evidences, recalculations, and normal procedures can be considered. When it comes to graduation rate, you can recalculate the graduation rate by taking the number of students who have cleared the exam by the number of students who have attended for the degree program to confirm the graduation rate of 85%. You can confirm the academic performance by reviewing the list of students who have achieved distinction and agreeing that to the distinction criteria to confirm whether the students have achieved distinction level marks. You can obtain external confirmation from a sample of students in order to confirm whether they have actually obtained a graduation level employment after completing their courses from the Rockto University. You can obtain the copies of feedback forms from the students in order to confirm whether majority of students have rated experience as excellent or very good. So these are the set of procedures that you can perform in relation to the key performance indicators. And the only thing is that whenever you write procedures in relation to KPI, it should not be rote and knowledge. It should be specific to the scenario. Is that clear, everyone?
Yes, sir.
Yeah. Then we have also studied procedures in relation to prospective financial information, or the PFI. So when it comes to the area of PFI, the first thing that you have to keep in mind is that when it comes to a PFI engagement, well, we know that prospective financial information are not historic information. These are forecasts which have not yet been taken place. These are the information that will be going to be taken place in future. So we will not be able to get much evidences here. So here, in case of a prospective financial information, we will be focusing much more on two procedures, mainly inquiry and analytical procedure. And in case if you find any specific supporting documents, definitely you can ask that as well. And when you write the key performance indicators, you will be getting requirements like this. Using the information contained in Exhibit 2, assuming that Hunt and Company accept the engagement to review Waters Company's cash flows, design the examination procedures which should be performed in the review of Waters' forecast statement of P&L. So they have asked us to perform the audit procedures in relation to forecast statement of P&L. So when they ask us to perform the procedures in relation to the forecast statement of P&L, what we need to do is that we have studied the PFI's reporting examination procedures. So you will be able to use some set of general points, like you can use the points of recalculation, performing analytical procedure by generally comparing the statements with that of the industry average. You can consider whether the trend in the forecast are in line with the industry average. You can consider whether the accounting policies used for the forecast is reasonable and are same that are usually we use for the audit of for the accounts of historic financial information. So all these are the general points you can consider. But to gain marks, you have to give importance for the specific points. You have to write the points specific to the scenario. So they have shown that the revenue is growing. So you can have an analytical procedure of revenue followed by discussion with the management for the reason for increase in revenue, which have been increased by dash percentage and by dash percentage. You can obtain the breakdown of revenue in order to confirm whether the revenue includes, you can recalculate the amount of revenue by considering the average number of tickets sold multiplied by the new ticket price. So they have mentioned here, it's a theater. They have increased the ticket price from 7.5 to 10. So we can discuss with the management about the rationale on the basis of which they have increased the ticket price. Then we can perform analytical procedure by comparing the new ticket price of $10 to the industry average to confirm whether it is reasonable. And in case of significant variance, we can discuss with the management about the reasons. We can obtain the breakdown of operating expense in order to confirm whether the operating expense include staff cost, depreciation of PPE, repair and maintenance of cinemas, etc. There has been increase in the amount of finance costs. We can discuss with the management for the reasons for the increase in finance costs in order to confirm whether the increase in due to any new loan taken by the client company. So in this regard, you can ask for the examination procedures. So it should also be specific to the scenario. Is that clear, everyone?
So,
yeah. Then one of the key area is the area of due diligence engagements. So when it comes to due diligence engagement, the examiner will be asking you to perform a due diligence engagement relating to the client company. So well, we know that when it comes to due diligence engagement, it means it's an examination done by the auditor in order to confirm whether the potential investment by a company will be worth it or not. So that is something called due diligence engagement. So we have got two specific requirements for due diligence engagement. One is that they will ask us to explain why matters require further investigation as part of the due diligence review. So when they ask for why matters require further investigation, well, we need to first of all understand what is the role of the auditor in performing this due diligence engagement. In this case, they have discussed that they are performing a due diligence review. They have asked us to perform due diligence review in order to provide them with the value of the acquiring client, Zebra companies, assets and liabilities. They have asked us to analyze the company's operating profit forecast, and they have also asked us to help them in determining the purchase price. So when they ask us why the matters require further investigation, you have to go through this scenario and you need to trace whether there is any matters that might affect the valuation of the Zebra company's assets and liabilities, whether there is any factors that might affect the company's operating profit forecast, whether there is any factors that might affect the company's purchase price. So if there is any matters that affect any of this, then you can mention that it requires a further investigation. Say, for example, in this case, they have mentioned that Zebra company is our acquiring client, and Zebra companies, one of the customers have left the company as the company's competitor supplier is offering goods at a cheaper price. And the suppliers who taken our customer have made 5% reduction in the Zebra company's annual revenue. So we have lost 5% of revenue. So this is the case here. So in this case, you have to consider whether there is any issues that affect the valuation of Zebra company's assets and liabilities. Yes, there are factors. You can mention that Zebra company is manufacturing bespoke inventories. They are providing unique products to the customers. So these unique products might be held in the company's warehouse, which might not be able to be sold to any other customers as it's unique products. So this have to be written down to the lower of cost or NRV, or should be written off from the financials if it cannot be resold to any other customers. And if the company have not done that, this inventory might be held in the company's warehouse and value of net assets will be overstated. In addition to which, if the company was specifically using any machinery for the for the purpose of manufacturing the bespoke inventory, the value of inventory the value of asset need to be impaired. And if the impairment is also not done appropriately, again, there will be further increase in the amount of net assets, which is unadjusted. Net assets should be considered while determining the purchase price. So it requires further investigation. Then you can mention that the matter affect the operating profit forecast. They have already told us that customers have left the company and they have lost 5% of revenue. So this should be reflected in the operating profit forecast. Operating profit will also be considered while determining the purchase price. So we can consider it as a bargaining tool to reduce the price further. Then again, customers have already left the company. In addition to which, there can be chances that there will be more customers leaving the company later as the competitor is offering products at a cheaper price. So in this case, there will be further issues with the reduction in the revenue that might be occurring in the upcoming year. So we can use it as a bargaining tool to reduce the price. So this is why we require further investigation. So this will be the way in which you will be explaining answers in relation to due diligence engagement when the examiner asks why the matters require further investigation. And in this same manner, you will be getting another question. So this is one of the most commonly tested questions. Examiner will be asking you to provide additional information which you require to perform the due diligence review. And you should also explain why you need that additional information. So say, for example, in this case, Jacob Company is a client company of our audit firm, and they are providing services like repair and maintenance. And they need to acquire a company which offers repair and maintenance of swimming pool and hot tub, for which they are acquiring another company called Loki Company. And Loki Company have given us their details. And we are responsible for performing due diligence of Loki Company. We need to know whether the investment which is planning to be made by Jacob Company in Loki Company will be worth it or not. So Loki have given us some sort of data. So we need to analyze this and we need to ask to them additional information which we require in order to analyze the due diligence of this particular client. So when it comes to due diligence engagement and when the examiner asks you for additional information which you require to perform the due diligence, you can always consider some set of additional information in every case, like the corporate structure of the entity. You can ask for the prior year audited financial statements, most recent management accounts. You can ask for the budget and forecasted financial statements. And the purpose of each of this should also be clearly specified. And say, for example, there are some matters which are being provided to us. The company have grown rapidly in the last 3 years as more affluent customers can afford cost of installing and maintaining swimming pool and hot tub. Expansion was funded by a significant bank loan. Company relies on an overdraft facility in the winter months when less operating cash inflows arise from maintenance work. So in this situation, what we can do? So they have given us some information and we are required to ask for some additional information. So they have told us that they have taken a significant bank loan. So we need to get some data there. What will be the data? Details in relation to the bank loan. Then we need to mention the purpose. Why? Because after acquisition of Loki Company by the Jacob Company will be responsible for settling of the whole amount of bank loan. So we need to know the amount of liability in relation to this bank loan, any covenants attached, interest rate, repayment terms, all this have to be considered. Because if the repayment of this loan have to be done immediately, the company might not be having sufficient cash because we are spending significant amount for the acquisition of the Loki Company itself. So we need to know the payment terms. Then they have specified about an overdraft facility. Then we need to get to know more details on the overdraft facility because we need to know the payment terms as well as the condition on the basis of which the company have taken the overdraft facility. And in addition to which, we must be able to understand whether we will also be able to avail the same overdraft facility because during the time of winter month, we will also be facing the same challenge. So we must be able to get the overdraft facility. Then only we will be able to continue with the operations. So we need to understand that factor as well. So this is how you will be asking the additional information and the purpose for additional information should also be clearly specified. Okay. So please go through the question of Jacob Company later. And mainly money laundering. So basically, when it comes to the area of money laundering, we have studied many theories relating to the money laundering in the first hand. So basically, well, we know that money laundering is the most important theoretical area, and as well as it's a very simple one. So when it comes to the area of money laundering, it's nothing but it's the process by which the criminal proceeds from the criminal attempt to conceal the true and the original ownership of proceeds from illegal means, allowing them to maintain control over proceeds and ultimately providing legitimate cover for the sources of income. In very simple sense, it's nothing but it's a conversion of illegitimate fund, the amounts which we earn from illegitimate activity. By concealing its original source, we will transfer it into a fund which is earned from legitimate source. That is something called money laundering. And we have studied the 3 stages of money laundering, which includes placement, layering, integration. Placement is the initial disposal of the illegitimate fund into a legitimate business activity. Layering is the transfer of money from business to business or place to conceal the original source. Integration means finally the money will have the appearance of legitimate fund. And when it comes to offenses relating to money laundering from the perspective of an auditor, the main offense will be failure to disclose. There will be tipping off and failure by the financial service business to meet the obligation under money laundering. So tipping off is the main offense that will be faced by an auditor. So basically, when it comes to tipping off, it means that the auditor might be letting the client know that they are under money laundering investigation. So basically, this tipping off offense might arise when the auditor will be asking questions directly to the client in relation to the money laundering activities. An auditor is never ever allowed to do that. An auditor should be disclosing about the money laundering related activities to money laundering reporting officer only, and he should not ask to the management anything relating to the money laundering. And it is the responsibility of every audit firm to maintain an anti-money laundering program. We can also have a direct question from this area. They will ask you for the elements of anti-money laundering program. You must be having money laundering and terrorist financing risk assessment. Then you must be carrying out systems, policies, controls, and procedures that need to be effectively maintained to manage the money laundering related activities. You must be having customer due diligence, enhanced due diligence, and simplified due diligence procedures. Enhanced record keeping and data production should also be followed. We have studied that when it comes to customer due diligence, we need to know who our customers are, as well as we should not accept any high-risk clients engagement. When it comes to enhanced due diligence, the background of each of the customers have to be clearly understood before performing the transactions. And when it comes to simplified due diligence, we must not carry out low-risk clients engagement. Sorry, this should be carried out when we are taking up the engagement of low-risk clients. And enhanced record keeping means that once the customer due diligence is completed, we must be maintaining details in relation to that, especially the copies of the evidence inspector, transaction with this client, internal and external money laundering or suspicious activity reports, everything has to be considered. And the records must be kept at least for 5 years from the date on which the relationship with the client have been ended. And when it comes to reporting, a person in the organization should be nominated to receive the disclosures in relation to money laundering. And anyone in the organization who is having suspicious activity relating to money laundering should be reported to MLRO. And MLRO will take care of the issue. They will consider whether this particular money laundering related claim raised by the auditor is appropriate. Then MLRO will report it to Financial Intelligence Unit and National Crime Agency. MLRO will be using a standard format which includes the suspect's name, address, and date of birth and nationality. Then any identification of references will be provided. Nature of activities giving rise to suspicions will be given, and any other information relevant will also be provided by the MLRO. Then you can expect a question from this area. There's a question called Lark and Company, and the requirement will be like this. They will ask us to discuss the implication of the circumstance described in the audit seniors note and nature of reporting. So when it comes to a scenario, when they ask us for the implication of the issue, so first of all, in order to understand whether it's a matter relating to the money laundering or not, you need to first of all go through the scenario. You need to check whether it's a cash-based business, whether any owner is involved in the business, whether any owner have introduced an illegitimate fund into the business activity, whether they have transferred the money from place to place or business to conceal the original source. Finally, whether the fund appears to be there in the company's financials. If all of these matters exist, then it's not money laundering activity. So you have to consider whether it's a cash-based business whether owner is involved, whether the owner have introduced any fund, whether the owner have transferred fund from business to business or place to place. Finally, whether the money appears to be there in the company's financials. If it's so, then it's money laundering. And while explaining the answer, first of all, you have to identify the facts from the question. Whatever which gives rise to your suspicions about the money laundering for the client, you have to include their factors, and you need to mention it as possibility of having money laundering. Then you need to explain why it's considered as money laundering. Money laundering definition have to be provided. Then each of stage of the money laundering have to be explained, and the points which are there in the scenario which represents the fact that there is a money laundering activity, you have to represent the scenario within the definitions. And you have to explain what is tipping off, and if there is any possibility of tipping off there in the question, you have to mention that as well. And they will be asking us for money laundering reporting. So money laundering reporting is not audit reporting. Instead, the reporting which we learned earlier, there should be an MLRO. Report should be submitted to the MLRO. MLRO should be reviewing that. After confirming the validity of the claim, MLRO should report it to Financial Intelligence Unit by using the standard report format, and the report format should also be provided. This is how you need to represent there. Is that clear, everyone?
Yes, sir.
Yeah. So these are the major area of the syllabus. And in addition to these areas, we were also having some other additional areas like forensic audit, the importance of using professional skepticism in various areas of the audit. So all this can also be asked. So we have quickly brushed through almost all the important topics of the AAA syllabus. So well, we know that we were having more than 100 hours of session, and all these 100 hours have been summarized to the last 3 days session. So definitely we were taking sessions in a very high speed pace, but it is for the benefit in order to cover the maximum areas of the syllabus within this short span of time. So everyone, please do ensure that when you practice questions, make sure that you are going through every sort of syllabus area. In addition to which, you should be making sure that you are also familiar with the practice platform. Please make sure that when it comes to the practice platform, there is nothing specific for the paper AAA. When it comes to the paper AAA, you are only required to have typing skill, because there are no other tools that have been used for the AAA paper. But make sure one thing, you will be having response area 1, response area 2, response area 3, and so on. So the response area 1 might be an Excel sheet. Response area 2 might be a word processor. Response area 3 can again be a word processor. And after providing each of the requirement, it will be mentioned there. Requirement number 1 answer should be provided within response 1. So if the analytical procedures are asked, they might be mentioning that answers for the analytical procedures should be included within response area 1. So in that case, maybe response area 1 will be a spreadsheet. So you have to provide the answer within that particular response area itself. And again, if it is provided that answer for exhibit 2 should be provided within response area 5, you should be providing answer in the same response area itself. And there's a reason for that. See, basically, when the examiners are provided or the markers are provided with your answers, the markers will not be getting the whole answer of a particular candidate to review. Instead, the markers will be provided with a specific response. So they are responsible for reviewing only that response area. So consider that if I'm a marker, then I will be responsible for reviewing only the answers for audit procedures in relation to the question number 1. So if I am not able to find your audit procedures answer in exhibit 5, response area 5. So I will be having that particular answer sheet at blank, and I won't be giving any marks for that. So even though another marker finds that in any other response area, they will not be giving marks for that, because they will be able to provide only marks for the answer which is apt for that particular response area. So you should be specific to that. And in addition to which, whenever you give answers, make sure that you are properly going through the requirement, because well, we know that they can be having possibility of confusion between matters and further action, matters and further procedures, then matters before accepting the engagement, matters before accepting terms of engagement. So all of these are very important. So please make sure that you are familiar with each of these. Is that clear, everyone? Yeah. So these all are the areas which are being tested for your AAA exam. So please make sure you have good knowledge on the area of accounting standards at the first stage. because accounting standards are the most important things about which a student should be having proper knowledge. Because without having any knowledge in the area of accounting standards, you won't be able to perform questions properly in the area of 50 marks as well as in the area of 25 marks. In addition to that, especially when you practice each of the questions, practice in the practice platform and at least by using your laptops. And you have to write answers for every question. By just merely reading the questions and answers will not benefit you in any manner. So please make sure that you're going through all the questions. You have to write down the answers. You have to practice all the important questions, especially the questions that we practiced in the last few days. You have to go through that as well. Okay. And anyone who were attending in the regular session may refer to the old videos which are there in the application. So please go through the videos again and again for maximum number of times. If you have any concerns with regarding any of the questions, as well as with regarding any of the topics that we have already taken, I've included the name of topic as well as the questions practice as file name. So you can refer to that if you have any doubt in relation to the questions that we have already practiced. So once again, we were quickly discussing through almost all the topics which we have studied for more than 2 months, like more than 50 days of live classes. So definitely everyone should practice this area again and again for maximum number of times and do well for the exam. All right. So that's it, guys. Thank you so much. Thank you. Bye. Thank you.